Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, or you can find the link to the website in the description below. Real estate investment trusts, or REITs for short, got a big boost in early November 2023 after the Federal Reserve hinted cuts were coming. A specialty mortgage REITs, or MREIT, like Seven Hills Realty Trust, traded on NASDAQ under symbol SEVN, got even a bigger boost in mid-December 2023 after the Fed signaled that multiple rate cuts were on table in 2024. It took a while, but the Fed announced its first rate cut with bigger than expected half-point reduction in September, followed by a 25 basis cut in November and December, bringing its key lending rate down from full percentage points in September to a range of 4.25% to 4.5%. The federal funds rate is the rate that the banks borrow and lend to each other overnight. It is not the rate consumers pay, but it still affects the borrowing and saving rates. For REITs and MREITs, though, federal funds rate is important. Higher interest rates make it more expensive for REITs and MREIT to borrow and pay down debt. Higher interest rates can cut into profit margins too. While lower interest rate could mean less income from interest spread, it could lead to more lending, which is also good for MREITs like Seven Hills Realty Trust. John?
Yeah, thanks, Mo. Seven Hills Realty Trust is a MREIT focused on originating and investing in first mortgage loans secured by middle markets and transitional commercial real estate, or CRE. Here in the United States, management describes middle market CRE as commercial properties with values of up to $100 million and transitional CRE as commercial properties subject to redevelopment or repositioning activities. Now, the company currently has 22 floating rate first mortgage loans diversified across geographies, sponsors, and property type. Total loan commitments are $652 million with a weighted average all-in yield of 9.6%. By property type, multifamily accounts for the majority of its portfolio at 37%, followed by office, industrial, retail, and hotels at 5%.
According to the management, Seven Hills, and I quote, delivered solid third quarter results.
Yeah, for the third quarter ended September 30th, 2024, Seven Hills Realty reported net income of $3.5 million or 23 cents per share. Distributable earnings came in at $5.3 million or 36 cents per share. During the quarter, the company closed on one new loan secured by a hotel in Lake Mary, Florida. Total commitments of $16 million, and it also received $70.6 million of repayment proceeds. And it ended the quarter with cash on hand of $82.2 million and unused capacity of $317.7 million.
If you like what you see so far, check out incomeinvestors.com. While you're there, you could also sign up for our free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. And now back to the video. And John, it maintained its quarterly dividend of 35 cents per share.
Yeah, as a mortgage or MREIT, Seven Hills has to legally distribute at least 90% of its taxable income to shareholders. In the third quarter, it generated distributable earnings of 36 cents per share. And that's more than enough to fully cover its quarterly dividend of 35 cents per share. The third quarter dividend of 35 cents per share translates into an annual distribution of $1.40 per share for a forward yield of 10.27%.
The SEVN stock has great long-term capital appreciation.
Lots of investors get bogged down by near-term share price volatility, and a reliable high-yield dividend can help shareholders ride out that instability. Now, even though SEVN stock took a bit of a hit after reporting its third quarter financial results in late October, it has been on the rebound since then and is trading up as of this recording 11% year to date and 12% on an annual basis. Now, longer term, SEVN stock has performed quite well, especially over the last 2 years, with total returns of 79%. Over the same period, the S&P 500 has rallied 52%. Now, keep in mind that that's the total return with dividends reinvested. If you elected to pocket the quarterly payout, the 2-year total return slips to 41%. That's less than the S&P 500's 52% gain. The near-term outlook remains bullish for Seven Hills, currently trading hands at around $12.95 per share. Wall Street has provided a 12-month share price target range of $14.50 to $15 per share.
John, thank you so much for your insights. Seven Hills Realty Trust is a great REIT that saw its share price take a hit during the Federal Reserve's aggressive interest rate hike cycle in 2022 and 2023. With the interest rate hike cycle likely over and cuts underway, the macro and microeconomic outlook for SEVN and other REITs remains solid. The demand for commercial real estate debt capital in underserved middle market is expected to remain strong as alternative lenders like Seven Hills increase their foothold. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned, and in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.